in aiding capital expenditure accounts and so the budget, we saw Lagos State Government initiate a debt issuance program as part of ongoing efforts to raise capital targeted at achieving the transformation of Lagos into a true megacity backed by modern infrastructures. Lagos State officials announced this week that they're about to place the second tranche of this 275 billion naira debt program, which was initiated back in 2008. This total equating to 1.8 billion in dollar terms. And to discuss the issuance, Bolaji Balogun, CEO of Chapel Hill Denham, joins us now from our studios over in Lagos. Thanks so much, Bolaji, for joining us this afternoon. Well, I've been reading reports from analysts saying that the second tranche at this stage is set to potentially be more attractive than the first 50 billion naira tranche that was issued, which had a coupon of 13. So let's look at some of the attractive forces that are at play right now.
Thank you very, very much, Alicia, and good morning. Very, very clearly, this is a fantastic time for the Lagos State government to be coming to the market with tranche 2 of the bond issuance program. There are a number of elements which are coming together at the right time for Lagos State. There's a correlation between liquidity being at an all-time high in the domestic market, interest rates also being at an all-time low. But more importantly, I think that the whole investment case and the whole story about Lagos State is very, very evident for all of us to see in the infrastructure renewal and the transformation that's going on, under the administration of Governor Babatunde Fashola. And that in itself, is encouraging a lot of institutions. Very, very interestingly also, I think people are also gaining a lot of comfort from the fact that the securitization structure around this bond provides real access to Lagos State's internally generated revenues. And Lagos State is very much in an interesting scenario in Nigeria. Most states generate a majority, typically anywhere from 75 to 90% of their annual revenues from the center. In other words, from federally allocated revenues. In the case of Lagos State actually is the reverse and generates about 76% of its annual revenues internally from collecting taxes in what essentially is a commercial capital of Nigeria. In that instance, the normal way that you would securitize, a subnational bond in Nigeria would be through what you call an ISPO, which is a charge on the federally allocated revenues. What Lagos State has done is to create a security trust structure, which essentially provides a first charge on its internally generated revenues, thereby providing additional comfort to investors. It also has a good track record as a state, as the only state to date, which has issued, within the lifetime of one administration, more than one bond. And it has performed well on that bond. It has paid coupons, on time. It has provided, the regular deductions into the security trust structure that has been created. But most importantly for everyone, it's the fact that everyone in Lagos sees the benefits of the capital that the state is putting into infrastructure that is encouraging the markets.
Why then, with all of that being the case, has the state government been so cautious with this second series bond issue? If the market is awash with liquidity and so positive around it, then should we not be seeking to raise more than just 50 billion naira this time round?
Well, what the state has done is to create a bond issuance program which, over a 2-year period enables the state to essentially raise, somewhere in the region of, $1.9 billion. Now, under this bond issuance program, the state can come to market as many times as it wishes in the course of a year. Almost certainly the expectation is that this tranche of the bond will be significantly oversubscribed. If it is, there is a real possibility that the state, may take some additional capital, but almost certainly, even if it didn't in this tranche, tranche 3 I wouldn't imagine would be too far behind.
You talk about an oversubscription, but we can't ignore the fact that this comes at a time where we've got the equity market starting to gain traction again. Investors not as risk averse as they've been through last year. And with the risk of funds going that way, do you run the risk of not achieving your targets with regards to this bond?
Not at all. I think the big driver is really liquidity at an all-time high. The equities market rise is largely being driven by international institutional investors, some of whom are paying attention to the market for the first time, some of whom are buying the market for the first time. The investor orbit, in terms of, fixed income issues, is very, very, different from that. That orbit includes, domestic banks, it includes domestic pension funds. There is some fair amount of international interest at the short-dated end of the market, but it's very, very clearly a different investor orbit.
Well, of course, the government, as you said, is using this capital raised here to fund ongoing infrastructure projects, 75% being directed that way, while the remainders are being directed towards refinancing outstanding loans. How successfully has that first tranche been deployed? Because as I was chatting to chatting about with Bismarck earlier on in the show, implementation is a key focus and concern in Nigeria right now.
Well, I think Lagos State is setting a very, very different standard. And that's why, as a firm, we're very, very delighted to be working with this issuer. Budget implementation, as a percentage is significantly higher in Lagos State than anywhere else in the Federation. But let's talk specifically about that first tranche. The state government has used some of the proceeds, for example, to provide the seed funding, for the first toll road in West Africa, which is the Lagos-Lekki Road, which is currently under construction. It's also used it to provide, initial, financing towards the expansion of the Lagos-Badagry Expressway, which will considerably open up the western axis of Lagos. Lagos-Badagry essentially is a thoroughfare to our largest land border, the Seme border with the Republic of Benin. And today, a road that's approximately 65 kilometers takes you anywhere from 3 hours to 4.5 hours, to navigate. What the state plans to do essentially would provoke, something like a 75% reduction in traveling time. And the impact of that on GDP alone within the state is very, very significant.
Well, certainly, Bolaji, it is something that I'm sure Nigerians are looking forward to pretty intently. We'll be tracking developments there as they unfold.